Let me know where you are watching from in the chat box. Where are you watching from? Alright, where are you watching from? Let me know in the chat box. Okay, so today we'll be looking at technical analysis using price action. And my name remains Tunmise Olaoluwa. So here is a quick disclaimer. Leverage trading involves risk. Trade responsibly. Regional restrictions apply. So please check out our terms and conditions. These sessions and webinars are for educational purpose only, not financial advice. Past performance is not indicative of future results. So here, a quick about me. I have over 7 to 8 years trading experience with a solid background in finance and quantitative research. My trading results have been consistently profitable across various strategies. I frequently trade price action, momentum, trends, and candlestick patterns, primarily focusing on Euro USD, GBP USD, and USD JPY currency pair. So in today's agenda, we'll discuss the use of top to bottom strategy. We'll review Euro USD currency pair. We'll review price movements of Euro USD. We'll review currency suggested by you, the audience. And of course, along the way, I will be responding to questions and answers. So this session is going to last for 45 minutes. You can use the YouTube live chat to ask your question during the webinar, and I will periodically check it to answer them all. Now, this strategy, we're going to discuss what the strategy consists of. We're going to analyze historical price movements. We're going to utilize candlestick formation, chart patterns, and market structure. We're also going to look at what kind of traders is it suitable for. 1, position trader. 2, intraday trader. 3, swing trader. Now, when to use it? When do you use this strategy? During high liquidity periods, during time frames from 1 hour to 1 month. So let's go straight to the live trading session. All right, so this is our live trading session. So this is Euro USD. Let me take off all the. Okay, good. Also, so we're going to zoom it in. So let's go down to the daily time frame. Now, our strategy, we are going from top to bottom. All right, we're going from top to bottom. So here from the top here, which is daily time frame, I'm going to look through market structures, levels of support and resistance. All right, let's go. So let's map out levels of support and resistance. which is like let's do a general overview. So we have here, we have one here, we have another 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 one here. Okay, so these are levels of support and resistance. Okay, so you can see how price has been moving, goes up, come down, go up, come down, go up here, and then at this point here we saw that price created a descending triangle. The descending triangle here, I want to believe, yeah. So let's see, yeah, let me just carve it out. So this is a descending triangle, as you can see. I'll see how price break out of this descending triangle. All right, and what we have here now, so price break out of this descending triangle. This level here is known as a key support zone, right? This level here is known as a key support zone. Okay, good. This is a key support zone. So price broke out of this support, came down here. Here is another support that price broke down through and came further down here. And now we can see that price has been rallying, in this range. All right. When we look at this level, you see that this level now serves as a resistance zone. So let me just put it here. Let's label it together. Serves as a resistance zone. Okay, let's do something. Resistance zone. Alright, so this level serves as a resistance zone. Also, we can call it a bullish invalidation. A bullish invalidation level. Okay, this is a bullish invalidation level. So why is it a bullish invalidation level? So you can see price, coming up here, being pushed back, came up here, being pushed back. So this level is what is where the bulls are being pushed back. All right, so we call it the bullish invalidation zone. Now we can see here is the support level. So we have two support levels we're going to be watching out for. So yeah, let's go. This is support level 1. Support level 2. Okay. So if you are following, let me know in the chat box. So we have support level 1 and support level 2. Okay. So the chances that price goes up here and is being pushed back, is high because this is a bullish invalidation level, also a resistance zone. Okay. And if it's being pushed back, this is the first support level that might hold it. And if there is a breakout from this first support level, then we are heading for the second support level. So this, identifying these levels and these territories would help us when positioning ourselves. Either we are going for a buy or a sell. So let me know if you're following. Okay, I can see Jack Int says I'm following. Fantastic. So let's go down to the 4 hours time frame. Don't forget I mentioned that what we are going to look into multiple time frame analysis. Multiple time frame analysis. So this analysis will be looking at the higher time frame, the daily time frame, down to the 4 hours time frame, down to the 1 hour time frame, down to I think we can stop at the 1 hour time frame. We can go deeper into 30 minutes, 15 minutes, and the 5-minute time frame. All right. So here we are on the 4 hours time frame. So when we look into the 4 hours time frame, definitely we can see how price has been moving up, coming down, moving up, coming down. And within this 4 hours time frame, it has its own levels of support and resistance. So here we're going to put this is a level. Okay. All right. So from this level here now, we can see how price has been ranging at this level. Price has been ranging seriously at this level. You can see how price has been ranging even at this level. All right. So what we want to do now is, from all indication, we can see that the market is in a downwards direction, and when we zoom in from here, let's take this out so we can see clearly what I want to explain. When we zoom in from here, you will see clearly that this is a downward sloping movement. This is a trend movement, right? The trend movement. Okay. Now, why is this something that we also need to watch? That is because there has been a higher low pattern. Higher low, higher low, not higher high. When there is a higher high, market is going bullish. All right. So the chances are that market is going to continue to drop for some time is when there are what? There are higher lows. Okay. So we can see that price moved from here. This high created a high here, moved further down here. All right. Went up here, created another high, but the high is lower than this previous high. Came down, went up again. Then created another high, and you can see that this high is higher than this high. So this high now is lower than the previous high. That's what makes it what? A higher low. So this high is higher than the current high. So this high is lower than this high. This makes it what? A higher low, continued higher low. All right. So the chances that price would push back from here is high, either to the first support zone, okay, or to the second support zone. Yeah, marvelous. I see you. You're welcome. So if you have any question before we go further, let me know in the chat. If you have any question before we go further, let me know in the chat, because we're going to be taking trades now. Okay, let me know if you have any question in the chat. All right, now let's go down to the 1 hour time frame. So when you look at the 1 hour time frame and you zoom in, yeah, you would see that there are quite a number of wick to the top, right? Who can tell me what this means? Who can tell me what these signs means? What these signs means? What do they tell you? These signs. This candlestick here. You can tell me the type of candlestick you see here and what they actually depict. I need a response in the chat, guys. Okay, thank you, Jack. Says no question from me. I need a response to my question. What type of candlestick is this and how do they react? How do they react? Okay, I'm waiting. What type of candlestick is this? Okay, so they've been moving sideways. Okay, what type of candlestick is this? I'm seeing doji. I'm seeing inverted hammer. So who can tell me? Good. Someone said, Jack said it's a doji candlestick and it signals a potential turnaround. Good. Someone, MEI says, Kingsley says indecision candle. Good. Someone says price respecting the resistance. Good. I mean, these are very brilliant submissions. So we can see these candlesticks coming in, depicting a what? A change in market direction, a turnaround in market direction. All right. So we're gonna go now. It's on the 1 hour time frame. Choosing 2 lot size or is the 3 lot size. Click on our sell. We're gonna sell here. So we've taken a sell position from here. Why? Because there's a lower high, okay, and price is currently in the bullish invalidation level, okay. Then the candlesticks are, signaling a turnaround in market direction. So we have positioned ourselves ahead of the market turnaround. So let's set our take profit and our stop loss. So where do we want to take our profit now? We want to take our profit in the first support level, right? In the first support level. So let's put our take profit in the first support level. I'm gonna do 1.14981. Okay, then I'll take profit. I'm sorry, our stop loss rather. Let me put my stop loss just 15993. 15993. Okay, so yeah, if the trade goes in our favor, we keep $200. If it goes against us, we lose $9. So let's confirm changes. All right, so here we go. So we've been able to set our take profit and our stop loss. One interesting thing that we must as a trader take into cognizance and not joke with is stop loss and take profit. They are our key risk management practice. So these are key principles that you as a trader must uphold. Okay, you must uphold it. We must uphold it. Okay, someone says something here. It says it's because you're hitting the ceiling and the gravestone doji, basically a signal to sell. A signal to sell. And we have taken position. Fantastic. Yes, who can suggest which currency we should look at next? Which currency we should look at next? Let's look at the USD JPY. Let's look at the USD JPY. So we'll start with the daily time frame. Are we together? All right. So USD JPY, and this is the higher time frame. So we're going to look at it from the higher time frame down to the lower time frame. Okay, at this point we're going to track momentum, we're going to track support and resistance zones. Okay, let's go. So from USD JPY, let's do this. So here now we see I've been able to map out levels of support and resistance, which is very, very key to our analysis. Levels of support and resistance. Okay? So let's go. I think we have another one up here, so we just work with this. Alright. We can see how price moved up, right? Now this is the higher time frame. Price went up, came down, went up, came down, went up. Okay. So let's go to H. Okay. Alright, so yeah, we can see how price has been ranging. So I think inside in the 4 hour time frame there is a minor support and resistance zone. So I'm just gonna do something to get it perfectly. I might switch from the candlestick chart pattern to a line chart. Let me see. Okay. Okay, so here we have it, right? And we're able to map out levels of support and resistance. So at this point now we can see that price went up, came down, went up here, and currently price is rallying. Price is rallying in this level, at this level rather. So if there is a breakout from this level, that's a buy. Okay, if there's a breakout upwards, that's a buy. Then if there is a breakout downwards, that's a sell. So now, what do you think? What's your outlook on Euro USD before I continue? What's your outlook on Euro USD? What's your outlook on Euro USD before I continue, guys? I'm waiting. Yeah, okay. Okay, so I see a bullish potential. Okay, I see a bullish potential. Okay, what else? One more. What are you seeing? Okay, I think I'll just move on. I think I like that response. I see a bullish potential. So, as you can see here now, the price is already at the tip of the ranging box. So let's see. So what's more or less like the potential upside? If we're going to take a buy position, I want to know the potential upside. So are we saying that price will then most likely reach this level? Because that's most likely it. Let me, if I can change the color. Let me see. Okay, so let's go. Let's see. Let me zoom out. Okay. So we take a buy position, yeah? Alright, taking a buy position. Let's go down to 4 hours time frame. So we set the take profit to 162035. $162.035. Okay. Then stop loss. Let's see. Yeah, stop loss should just be 380. Oh, okay. So yeah, the potential upside here is 26 take profit level and $6 if we hit a stop loss. So if we hit stop loss $6, if we hit take profit $26. Fantastic. Yeah, so we've been able to explore Euro USD and USD JPY. There's one interesting thing you need to know as a trader, that it's important for you to work with, all right, and to live with, and that is risk management. That is risk management. So if you are a total beginner in the space, all right, one, you need to start with a demo account where you can play around with various virtual money to better understand the market and your strategy without risking real capital. Two, use a stop loss order. So always set a stop loss to limit potential losses on every side. Trade with a risk to reward ratio. It's important that you aim for, you are willing to risk, say you're willing to risk $100, then your target profit should be around $200, right? So that's very, very important. Now, meaning you should aim to gain at least twice of what you are risking. Also, four, risk only small percentage per capital. Quite similar to what we talked about. But then, if you want to take a risk, you have to limit the risk to nothing less than 1 to 2% of your trading account per trade to prevent significant loss. 5, diversify your trades. Avoid putting all your eggs in one basket. Avoid putting all your capital into a single trade. Okay, if you want to take a trade of 0.5 lot size, you can break it down to say, okay, 0.2 at one point, 0.2 at one point, 0.1 at one point. All right, and you are entering them strategically. So avoid over leveraging. Stick to your trading plan. It's important that as trader in the space, you have a trading plan that you follow, and you don't want to deviate from your trading plan. There are times whereby you deviate from your trading plan, go back, do some audits, and sit back and stick with your trading plan. It's not always easy, but it pays off in the long term. 8, keep up with the market news. This time around, news is very, very important. Okay, if it requires you to stay on Twitter, if it requires you to stay on the news, please do stay on the news and learn from the news. 10, review and adjust your strategy regularly. Over time, review what your strategy has done, okay, and make necessary adjustments to them. Okay. Now, Octa offers a wide range of trading instruments with low spread, fast execution, zero commission, and it has various educational resources, 24/7 customer support, and a strong commitment to fund and data security. Now, the Octa trading app is live on the Google Play Store. You can go check it out and download it. Now, here's an opportunity for those who are joining us, the opportunity for you to double your deposit using my promo code. Take advantage of this promo code in 5 steps. And how do you do that? 1, you open the Octa trading app or visit our official website. You go to your profile, you find the promo code section in the menu, and you enter the promo code and press activate. Make a deposit and enjoy your bonus. These are just the 5 steps you need to take, and the promo code is Tunmise 100. TUNMISE. Tunmise 100. This is the promo code you need to get started. All right. Now, what is the summary of what we've discussed? We discussed the price action strategy and its components, the suitability for traders, and also its applicable scenarios. We reviewed this strategy on a live chat during the live session, and we took trades on the Euro USD. We saw the potential, bearish momentum coming in, and we positioned for it. On the USD JPY, we saw the bullish momentum coming in and we positioned for it. We didn't just expose ourselves to this risk, we also implemented risk management, which is essential for you as a trader to implement in your journey. Please, I'll be sharing with us trading principles we need to acknowledge, right, and follow. 1, analyze trading instrument. Make sure that the instrument you are trading, you understand it very well. 2, review your actions and reflect on your decision to identify what worked well and what can be improved. 3, keep up with the market news and updates. About market news and updates, it cannot be overemphasized. 4, use educational resources to enhance your understanding of trading strategy. This is also very, very important. Now, we have come to the section where if you have any question, I think I've been answering questions earlier here, and I'm doing quite a number of explanations. So please don't forget to tap on the subscribe button and smash that notification bell so that you will be the first to be notified whenever we are having our next webinar. Please do not miss it, and I look forward to seeing you in our next webinar. Here is an opportunity for us to share your valuable feedback with us. We value your feedback so much, and your feedback is essential for us to improve our webinar. So please take out a moment to fill out this survey. Scan the QR code on the screen and provide a feedback to the survey. This feedback will really help us to improve our webinars and serve you better. The survey takes 1 minute. Okay, so 1 minute of your time, and then we appreciate you. Thank you so much, and I look forward to seeing you in our next webinar. Have a great one, and bye everyone.